Well, good evening, traders from stormy Orlando, Florida. Can you guys give me a sight and a sound check, please? Make sure you can see my charts, but in this case, it's the. Yeah, it's the storms. That's the future cast, so. Okay. Can you hear me too, Barry? I take it you can. Alrighty then. Let's get started. Let's bring up the charts. And we go all the way to the top. I like this when I saw the cartoon out there, and it said, "Good news, you don't have the coronavirus." He said, "But Doc, can you still quarantine from my kids? They're driving me nuts." Hold on a second. All right, I should be modulating now, right, Mike? Okay, got it. I love this one where he wants to be quarantined from his kids, not necessarily from the virus. So here we go. Try to make this short and sweet in case we get cut off. Disclaimer: you could lose money in trading. It involves risk of loss of capital. Make sure you know what you're doing, and if you don't, seek assistance or step at least while you're learning. Use paper trade. A little background about me: I'm an ex-fighter pilot with 2 master's degree in computers and business, active trader since '98, full-time trader for 11 years now. It doesn't seem that long. I'm a technical trader. I use limited fundamentals, primarily the earnings stuff, but it's after the fact. And I moderate for hit and run candlesticks from time to time and provide one-on-one mentoring. The hit and run candlesticks stick around for some special offers in the middle and at the end of the presentation. Here's the agenda for the this week. What we're going to do is we're going to go over our lesson of the week, the economic calendar and earnings calendars, market overview, some trade ideas as I see them. They're a bit thin, but we'll go over them. Q&A for not stock specific questions and answers, and then we'll take a look at your stocks, again, time permitting, one per person. Also, let me know if you're long, you're short, or you're looking to go long or looking to go short. All right, lesson of the week: determining support and resistance levels. I look for swing levels. I use volume. There's a couple of ways to look at volume, and I'll cover that in a minute on how I add clarity to these swing levels. And after a breakout or breakdown, that old support level or resistance level now flips itself to the other side. And here's some swing levels. Over here on the left, we've got number one, we're in a channel. We're basically in I call it a trading range. And we get up here the first time, and we go down here for the double bottom. And I saw somebody ask about a user-defined double bottom, but these things work pretty well. Especially, I'm going to show you with the volume at price profile, and that'll work out quite well. Another way to look at it is, once we get up to these resistance levels, we stayed in the trading range here till we tried to get up and then looked like we were failing again for the third time, and finally we broke out. I didn't capture the volume here, but it doesn't really matter because it's price is king. We got up and then we pulled back. When Doug and Rick and I talk about, and Ed, we all talk about watch for the retest. Well, the retest of the old resistance level now becomes support if it holds. All right. And there's a couple of ways to look at volume. One, over here, number one, is vertically. This is the way we normally look at volume. And it adds a little bit of clarity here, but not as much as number two, which is horizontally. By price. Tell me how many people, how many shares have traded at a certain price level. And you're going to see this in my charts, and I'll go over it when we go into the live charts. And these act as good targets. They'll tell you, give you a good idea of where those levels could be going to when we do a breakout. It'll also tell you how much resistance there might be there or support on the downside. All right, economic reports. We got a biggie here this week on Wednesday, the FOMC and the chairman's presser in the afternoon, but we have some other things. I normally don't look at black dots or whatever, but this small business optimism index could try to drive the Russell. That's at 6 o'clock a.m. Eastern on Tuesday, the 9th. The JOLTS, the jobs data, and the wholesale trade out during the market at 10 a.m. on Tuesday. So be aware of those. We could get a, quote, jolt in the stock market turnaround. It's a nice turnaround time at the half hour. Wednesday, we got the CPI before the market opens, Atlanta Fed at 10. Petroleum report, I love to trade the petroleum report. It's a little too volatile lately, so I haven't been trading it, but I might get back into that groove here. Again, then we talked about the FOMC. Thursday, we've got jobless claims and the PPI numbers coming out. I ignored the natural gas report. To me, I've never been able to actually trade it that well. And import-export prices before the market opens on Friday. And a biggie at 10 o'clock, consumer sentiment. That I forgot that consumer sentiment came out, I guess it was a couple of 3 Fridays ago. And I was in the middle of a trade, and suddenly I was long, and suddenly it pulled back. The volatility increase, it really didn't change the trend, but the movement spiked up, and it took me out. But I did have a small profit, but I probably should have been aware of that before or during the trade. All right, here are some, quote, most anticipated earnings release. It's a really sparse week for earnings. I've circled the ones that I would be looking at. A lot of these have relatively high short interest and could move, or they've been moving quite substantially, and the opportunity for disappointment abounds. We'll go over the earnings here. What I've done is I've shown you the notable earnings before and after. So after the close will be the first line on Monday. Before the open on Tuesday is the second line. Again, after, before, and after. And there's nothing on the calendar for Friday morning before the open. And I've highlighted those that have approximately 8% short interest or more. Most of these stocks have had volumes over 400,000. I've loosened up the price range to slightly less than 5, probably I don't think less than about $4 right now. But I've got to have good volume. When we get into these light periods here, I might let one sneak through with about 375,000 or so. All right, identifying the best trade ideas. For those who've been here a couple of weeks ago, you may have seen this, but I think it bears repeating. I scan my earnings list, and I scan the stocks that I have on my watch list. That could be earnings related or not, but I really look at the earnings first. I pre-filter them on the Sunday for average daily volume, and I look at the charts. I've got plenty of time, and I look at the most likely candidates for big moves. And then during the week, before Tuesday, so on Monday night, I'm looking at the Tuesday earnings plays, the aftermarket on Monday, and before market here on Tuesday. But I look and see what the charts are. So what I can do for the ones that have reported already, I get an inclination of which way they might go, at least the way they were going in after hours trading. Does not mean it will continue, but it gives an idea. And I can figure out what would it take for me to go long or go short, and what would be my targets. And when, most importantly, do it in a nice controlled manner of figuring out what the reward to risk ratio is. I do not, I emphasize, do not trade in the pre-market or the post-market. The reason I don't is volatility and lack of liquidity. Ed can vouch for that. That in the most of the time, you're only going to be able to trade against other traders in your brokerage house. They're going to keep stuff in-house, and you're not going to be able to trade most of the time outside of your own brokerage house. Now, there might be some arbitrage going on, but most of the time, you're going to find that it's not a national market. So we could get some big disconnects. And wild swings during conference calls, after hours and before. And the ones I really hate on the conference calls are the ones that occur after the market opens. So I try to be aware of what a conference call is, not just what the earnings day is, especially for those I'm obviously interested in trading. And finally, and probably most importantly, is the big boys mostly trade during regular hours. They have the same kind of problem, is that the markets are not as robust in after hours and outside of regular trading hours. And I use the 5-minute opening range primarily as a proof that the move is real. I have on day trades and whatever used a 2-minute or 3-minute opening range, and that's very successful in most of the time when I use it, but it does take some getting used to, because you can get some wild reversals at anywhere between the 3 and 6 minute point. All right. I transfer all of my stocks that I'm interested in, including my holdings and the stocks that are on my watch list, and then the earnings list. And it's watch list, pre-market movers, and earnings, and I put them in a scanner, and I have the scanner help identify those that are moving and setting new highs and whatever. If I don't have a full list on my watch list, which in this case I did, but if I only had 3 or 4 that were on my daily watch list, I would also start looking at my master universe list. Now, I use the CBOE high option volume, and I've got about 400 to 410 stocks on that. And I try to look for gappers. I try to look for ones that gap about 1 to 2% minimum. And I want them to gap 1 to 2% more than the market. So if the market's gapping up 1% and it's gapping up 1%, there's no relative strength there. So, and I depend upon the LTA scanner to help me out in the pre-market. Once we open up in that first 5 minutes, what I'm doing is I'm letting the scanner confirm earnings gappers, and we're going to get a lot of stuff screaming by on those scans. And I monitor my holdings first. And I then try to go and look and see what the scanner, and of course Rick's out there and other traders are out there, and they're telling us what they're seeing in the pre-market and in the first 5 minutes to identify any possible new trades. But my focus is on 1, those that I have, 2, those that I've already had time to look at, and 3, the new ones, the surprises. Normally, I don't get surprised that much because we can know what's going to go on in the market. Yes, I'm going to have a very short 1.5 to 2 minute presentation on the scanner. That'll be out on my YouTube channel. It's basically a generic and not necessarily on how I use it. But if you guys want us to cover that, I can coordinate with Ed and with Rick, and we might be able to do that and show you. Again, Rick shows you how he uses it. Ed shows you how he uses it. And those guys are probably more adept at it really than I am, and they may be better people to listen to. But I'd be more than happy to tell you how I do it. All right. And then I continue to monitor scanner throughout the day for any possible new trade ideas. But I focus primarily 8:30 in the morning to about 11:30. In the afternoons, I'm usually not around. Because I've found that I'll make money in the morning and I'll try to give it back in the afternoon. So maybe I should learn from that and not try to give it back. Thanks, Nigel. But I'm going to post up the video that Ed was so kind to make for me. I ran out of time. My mother had me running some errands for her this afternoon, and I'll get it up and post it. It's probably right after this. It'll be just a few minutes. It's not very long. All right, the LTA scanner. The beauty of this, I used to pay $250, I think $300 was what it ended up going up to for a scanner that was far less capable and was not customizable to any degree that Ed has made this. I love this. It's a lot cheaper, and even at full price, it's half what I used to pay before. I think it's a real, like he said, a real game changer. You can have your favorite setups and patterns, and it's basically, I'm going to call it modular. It's kind of like a Lego bricks, and you put them together, and you can kind of put them together to scan for what you want. And if you need help putting them together, it is absolutely wonderful at providing help. And if he needs to come up with a new building block or brick, he'll be happy to do that and put his coders on it. All right, every Wednesday at 2 p.m. No password required. Live trading alerts, software support. Ed does a great job in that. Let me make sure you guys have got that. Okay. And the other thing I'd like to show you that there's a sale going on. It will end this month. So come 1 July, everybody will be paying $147 a month. But right now, it's on sale for $97 a month. And it will be grandfathered for as long as you have the LTA scanner and keep it on a monthly basis. You will never be charged more than $97 a month. No matter how much it keeps going up, you'll be grandfathered at $97. I think that's another sweet deal. I know of people that made their money back in the first day they've used it. So, again, I'm an advocate of it. Here's another fast overview and fast guide. Let me get over here on how, I think a 45-minute to an hour presentation there on how to use the scanner. And what was I going to say? One more thing. It'll come to me in a minute. All right, let's go on to the market overview. See how we're doing. Enough of my pontificating here. All right, I'm starting with crude oil where I don't like to start. We're in this gap now. I expect us to go up and into this gap probably, oh gosh, we could be 43 to 45. Let me back out a little bit. Nope, we don't see it on a 6-month basis. No, there's really not much. Whoops, got to go to 6. And let's go here. I think we're heading up here to about 43 to 45. I know that we're kind of getting long in the tooth. This has been in a rally mode since we got down to 10. We did my moving average crossovers, and we solidified ourselves in an uptrend. First part, middle of May, and we've been there ever since. So once we got over about 20 to 22 and a half, and we kind of stopped there, and we paused. We had the flip of my 8 exponential moving average to go above the 17. And what I do here is that tells me that that shows me what my trading trend is. And I only trade with the trend. I only trade with the blue lines above the magenta line. And oh, by the way, you can use the volatility stops. Right now I've got, if I had the red dot, it gives me permission to potentially go short if I have the right setup, but I do not. It's denying me permission from going long until I get a flip to the green side, and this is actually put in blue because green doesn't show up very well on black. So I will only be looking for long positions as long as we're above the volatility stop and the trend line is pointing upwards. If the trend is pointing downwards like we were over here, and the volatility stops are above current price, they're red, it's a red stop sign. I cannot go long. I don't care what I see. What this does, this rule keeps me from taking bad trades and being stupid. Now I want to also show what I was talking about, volume on its side. This right here, if you look over here, you see these things that look like skyscrapers sitting on their side. They've been tipped over. Well, that's the amount of shares that have been traded at a certain price level. So this one's pretty long, and it's right at about $24.75. You can see how what we did is we rose up and we paused. That one would have been from down here a trade, it would have been a target. And it would tell me that I should think about possibly taking some profits. But it would also tell me that I should expect a pause or a pullback in that area. Well, once we broke out again, where's the next level? Well, we've got some over here, and I try to line up them with volume and swing levels. Well, the volume and swing levels are anywhere here was about 33 to 35. And I marked these up in advance, and I'll have to mark this one here. What I've done now is marked 51 for us. Now, I'm going to have to raise that to 51.50 or so. Yeah, let me do that while I'm at it. And a lot of people will say, oh, you're putting it right at the 200 period, 200 period moving average. I think that's really 200. I'm not sure what the heck that is. Anyway, but what you'll do is you'll find when we pause, like we paused here at the 50, this blue line was the 50 moving average. People have said, oh, the 50 period moving average caused this to pause. Well, it didn't stop it. And maybe some people were trading off of it. But guess what? If we look over here to the left, that was a swing level. To me, price is more important, and that swing level where they had people there that got back to even after writing it down to 10 from 28, 26, they were glad to get back out even, and they just sold. And that's how I could use the volume at price. All right, let's go on over to gold. Gold's been pretty flat for the last month and a half. I don't see anything in it for the moment. We're going to have to kind of break out of this trading range. S&P, well, you can see that we're I'm going to back off a little bit here. We're coming up here on this volume and price line at about 32.35. I suspect that we will come this will somewhat act as a magnet, but it'll also act as a kind of a ceiling that we're going to have to take some time to get through. Okay, so I'm not thinking that I'm going to be initiating a whole lot of new longs here, although some stocks will operate and travel on their own. They'll march to their own drummer beat, but mostly it's earnings related. So if I find something that's earning related, it looks like a bullish setup and whatever, I won't hesitate to go long, but I'll be aware that my current holdings, which I think I only have one, I will basically say, you know what, I'll sell at the first sign of weakness. Well, Z, it might be, but I can't have. I have trouble with setting it up for mine plus the presentation. I think it'll come up a lot better on the video. Yes, Ricardo. It acts as an overhead resistance, and it acts as tells you what the support level would be. All right. To put that on Thinkorswim, studies, edit studies, volume profile. I leave everything as it comes straight out of the box, except on expansion, you have to change it from yes to no. If you don't change it to no, what'll happen is that these volume bars will be on the far right hand side and not overlap price. For me, I can't interpret that at all. And combine that with the fact that I have the opacity set down to 20 and my value percent set at 70, that will get you to exactly where you see my charts here. And the beauty of this one and Thinkorswim versus not TOS, TC2000, if I zoom in or zoom out, it remembers the volume at price level. See, I've zoomed in. Let me zoom back out. It remembers this level and these levels here. When I zoom back in, it doesn't change those levels. They stay the same. Unlike in in TC2000, it changes those, and the bar widths are very, very wide. Here they're very narrow, so you can help you pinpoint price, and they don't change when you zoom in. This is by far the way to go. All right, Dow looks an awful lot like the S&P. We're really up at a resistance level. It's trailing this one just a little bit, but then again, it's only 30 stocks. NASDAQ leading the pack. We've already recovered all of the trade-off, and we're now at new highs for the day and all-time highs. Russell lagging. It used to be lagging more than any other index, but it's now caught up with the Dow. Jojo, I use the 8 and the 17 exponential moving averages. I use a 50 and the 200 and the 100 because the 50 and 200 are, they're pretty much standard at a lot of traders out there. Not that I'm going to use them for anything other than to be aware that there might be some sort of pause or slight pullback when we hit those areas. And the 100, I found when I was working up in the Northeast that a bunch of hedge funds will like to use the 100 period moving average. So big guys using the 100. The 100 is this dash line here, and sure enough, we kind of paused around the 100 here in the Russell before moving higher. So it does work. It gives you an idea. I don't necessarily use those as buy-sell signals. but I just try to be aware of them. And the way I use the 8 and the 17, when they're separated like this in solid railroad tracks going, this shows we are in a solid downtrend. Only trade to the down direction. Right in here, kind of iffy. This kind of gives me an idea when the 8 comes close to the 17, we might be changing trend. So be careful. Once we go out here, we've got a trend going upwards, but it's ever so slight. Only when we got over here did we get into a solid uptrend. Well, let's go look back and look at the NASDAQ. Solid downtrend, and we had a pretty substantial move, and we've been in this uptrend for the entire time since first part of April. The Russell, we just covered up. NASDAQ, we just covered. Dow, this right here kind of got into a little bit of an uptrend, but it was kind of iffy, and only in the last month have we been going up substantially. The VIX, we're coming back down. I'm not sure if anyone knows this, but the 20-year mean, that's the 50th percentile number, is about 17.5 on the VIX. So we're elevated with respect to the last 20 years, but we're down quite a bit. When we had the coronavirus fears here, it got out of whack, and it's pretty much settled down. The 10 years rising. Darn it, you guys got to stay down there until I get my new mortgage next year. Let's see. Okay, let's go back to the market overview. Okay, I'm going to go into the trade ideas that I've got, and I want to mention, check earnings before trading. And even if you're not in the middle of earnings season, please check. Even if you get into a stock and you're long, sometime during the day before the market closes, do yourself a favor and check and find out on your holdings, verify when the next earnings report's going to come out. I actually had another thing that I do is when I go long a stock or whatever, I post it in the room. And what that does is usually if it has earnings in the next couple of days or this week, somebody in the room will tell me, hey, did you know it has earnings? And I'll go, yeah, I do. I'm only going to play it for a couple of days to get out. Or, oh, heck, no, thank you very much. I forgot all about that. I actually about in 2001 or 2002, someone in the trading room I was in pointed it out, and I got out, and it saved me a lot. I mean, the stock didn't come crashing down, but I would have turned a profitable trade into an unprofitable trade, and it was violating my rules. So, yeah. Doll, wait till I ask for trade ideas, okay? For stocks for yourself. Okay, let's go over. We do them in alphabetical order. Alexion did this huge move up on volume. I think it was on the coronavirus vaccine reports. Then it pulled back. It looks like it's pulled back to support. And on Friday, it started to move higher. My stochastics RSI tells me we may not be out of the woods yet. And I would have probably felt a little more comfortable if it had pulled back to about 110, maybe to 112. But I can't have everything. And if we move up higher, I may have to nibble a little bit on this. CEQP. Now this one has been on and off my radar scope for about the last month and a half. Okay, it's been an uptrend, try to find. The problem is that this one has been extremely difficult. It gaps a lot. And because it's oil related, a lot of this stuff happens overnight. You just basically have to pick a position like a perfect one would have been here on the 15th of May, and then hold your nose. It got 15th of May at about 10:50. Got up to about 12. That would have been time for me to take some off the table there. So then if it rolls back over, I'm probably not going to. I'd have to roll over quite a bit for me to be in a losing position. And of course, obviously, we've done a big rally. I think we're going to get a pop in the morning on some of these oils, so it may negate some of these, and we may have to wait for pullbacks. But I chose these anyway, based on the information I have. Is ELF Beauty? It got up here. My stochastics RSI is pointing up. This is a kind of a cautionary signal here at 18, and 18 is not maybe the best stock out there. It's probably one of the worst ones I have on my list. But the problem is it's kind of slim pickings here. Again, EOG, another energy related stock, coming into probably 65, which is the declining 200, but is also where the swings are over here to the left. Marathon Petroleum, MPC, probably wants to go up to 47 or so, but it could hit the bottom part of this gap here at about 42.50 or so. Murphy, same thing. This one's a beaut. This one has been really nice since the end of April. Spelunk, this one had a nice big run, and now I did a pullback, and it may be trying to set itself up, but I'm going to make it get over about 185 or so before I nibble. And Square, I'm looking for a pullback here, probably to the old resistance level here, or about 85.50 or so. Really right where the volatility dot is. It's in the, I'll call it a stop dot. But we may not come back that far. Stochastics RSI says we probably have a couple more days to pause or pull back. This one will tend to probably follow the market more than some of the others. VMware was a bit of a laggard back here in late April, early May. And suddenly we gapped up on earnings and did a pullback. Friday, I don't normally initiate positions on Friday, but Friday would have been a nice one to initiate a good starter position in this one on Friday around 150. All right, let's look at some shorts. Well, I have go over the shorts. I've got some of them marked up. And you notice, okay, let me go over my longs real quick in inside TC2000. Just what I'm going to do is I'm going to step through them. Notice that I've got them marked up. I've got support levels. I've got target and resistance levels all marked up beforehand. And I do these, and I refine them every night so that I'm ready for the next day's trading. So let's go here to shorts, personal shorts. So all the work you can do before the market opens and you're in the middle of this chaos, and you'll have clearer thinking, and you can go in and zoom out and try to figure out what's going on. ALNY is set up for a pretty good short here. I don't know what the options look like, but I believe they're okay. Aquist, if it rolls under this $5 level, but shorting a $5 stock is questionable to me. I normally like to get the $20 stocks or more, but again, there's pretty slim pickings here. Another $4 stock for GameStop. These have very active options, and you could probably trade the weeklies here, but that can get a little on the dicey side. Doug would probably chastise me for mentioning it to you guys. Myrna. Now, here's one thing I'm going to point out with mRNA. It has an extremely high average true range, 13.4% per day. That is not for the faint of heart. It's $7.8. Call it $8 a day. Now, this is an overall uptrend if you look at the 50, but it looks like it might be rolling over. And for this one, I might try to initiate a trade, and it could be a day trade, it could be a 2 or 3 day swing. I don't know. But I can definitely tell you, if it gets above 64 bucks, it would definitely not be a short. If it got down below this and then reversed back up, time to exit stage right. And NTRA, Natera, breaks through this level here. I think it goes down into the 36 level. If the options are pretty decent, which I believe they probably are, we can make some money on that one. Do my trades come through as alert or just in chat? Right now, they're only in chat. I'd have to coordinate with Rick, because not only does the trade go off as alerts in the room, but they also get sent out to the overall community, and we'd have to ask for permission. That I would not want to do that without him giving him his approval. But we could ask. No one's ever asked me that because I posted them in chat. But it's, again, awfully difficult to see them in chat. I understand what you're saying. All right. We've gone through those. Let's go back over here. All right. Did say that for those who are not members of the Hit and Run Candlesticks or the Right Way options, you can get not a free trial, but a very, very inexpensive. Yeah, I mean, I know what you're talking about, MT. You go up here and sign up. You can sign up for either Right Way options or Hit and Run Candlesticks for only $49 for 2 full months. 2 full months should be a long enough period of time for you to figure out whether you like what you see and what you hear or not. And $49? I can't take my wife out for dinner at a decent restaurant with a tip for less than a 50. So, and I'm not talking McDonald's here. We're talking most people that sign up here and do the 2 full months here, they come on to be regular members. Oh, and one other thing, when you sign up, whatever your price is at the time, you're grandfathered for life. Rick has never raised his prices on people who are members and stayed members. The only way you lose that grandfathership is if you cancel your membership. And one other thing, I do remember what I was going to say about the LTA scanner. If for some reason you decide you sign up and you sign up for 1 month and you go 2 months down the road, it's a month-to-month basis. You can quit. There's no obligation whatsoever. Once you pay your money and you run out to the end of the month, that's it. You're through the end of the month. If you say, I'm done, I don't want to use this, or it's not meeting my needs, fine. It's no long-term commitment. And that's the beauty of that. Ed has done a wonderful job. All right, if you want to follow me, I am on StockTwits, and I post some of my stuff here, usually after hours and on weekends. I will forward stuff that I see from other people that I think are valuable. I'm going to post up my YouTube channel again, and that's where, give me about 30 minutes after this webinar finishes, and I will have posted up the LTA scanner 1.5 intro type video, and then about an hour afterwards I'll have to render and then upload the video for this presentation in case you want to see it. But again, I only post stuff that comes from me. I only get to post the weekend segments that are from me. So if it's done by Ed, Rick, or Doug, I don't post it to YouTube. I'm trying to do that out of courtesy to them. All right, I'm going to open up for general questions. These are not stock specific. If you put anything in there, I'm going to ignore them. If there's something you would like to cover, what are my stochastic? Sully wants to know for my charts. Let me go to TC2000. It's easier. Okay, Stochastics RSI 7733. Let's do the edit here. RSI period. Let me go ahead and capture this. I use simple moving average. At first, I used exponential, but I found that, oops, I hit copy instead while I was trying to multitask. Okay. Bugger. Okay. All right. That is stochastics RSI and stochastic period in percent K. Simple. And then the percent D is just the percent D. I think that's the smoothing piece. And let's do here. And again, it's 3, no offset, simple. And I believe if you go to my YouTube page and type in Stoke RSI or just RSI, there might be a very short video on how I use it. I don't have time to do that tonight because we're at 8:45. But definitely in the room, I've done presentations, and I did a couple of hour webinar that was a paid event on stochastics RSI and how I used it, and I think it was probably one of the better ones that I've ever done. Try to put in there. Okay, let me go back up to come on, let's go here. Lauren asked a question. Let me change this so I don't oh, nope. Don't scroll to the bottom. Okay. I said I like to trade the petroleum reports as a newbie. I don't understand how you do that. Please learn to trade the petroleum reports. What I do is I let the petroleum report come out. It acts kind of like an earnings report. And then I use, and I do it intraday using the futures. I do not swing them. But I will trade the futures. Let's go over here. Let's go there. Let's get that down, and let's go to the crude oil. And what I would do, we zoomed up here. This is when we opened tonight. I'll just use this as an example. We got a little J-hook going on here. So what I do is when the petroleum comes out and it starts to run, I can either jump on that bandwagon and try to hit a quick 100 to 150 bucks, or I could try to float it into a trend and let it come back here, and then when it breaks out, and use my standard 3-minute move here. Now the problem is, for every 10 cents you got here, you're risking what, $100? So you could use the CL, or if you're a little risk averse, you use the QM, which has basically the same dollar amounts here as far as what it trades, because the arbitrage that goes on, but you're not risking as much. So instead of buying only one contract of oil CL, I could buy 5 and only have half as much as risk, and can ease off on here. So I tend to trade the QM because I can control risk a little better. All right, let me get back. Sandra, do you put any weight in candlesticks? Absolutely. If you also go out to my YouTube channel and Google favorite chart patterns. Okay. Or just favorite. If you just type in favorite on that search inside my YouTube channel, you'll find a presentation on my most favorite. Now, I can tell you my candlestick pattern of choice is the J-hook. I just showed it to you in the intraday chart here right here. This little pattern right here is my go-to favorite. Now, what I do is I want to see this overall pattern, the zigzag or the J-hook. But what I also want to see is something that's like a doji at the bottom. We've got a pullback, doji, and then I get a bullish candle and candle pattern. So all candle patterns take at least 3 candles to form. I don't care. These people say, oh no, well I can get a doji with one. Yeah, but what does it mean? It made its indecision. It doesn't know whether it wants to keep going in the direction it was going, in this case down, or wants to reverse back up. You have to wait until it gets back up to know that it's a reversal, or wait till the next candle starts to form at least before you know that it's going to continue lower. All right. What else do I like? I do like bullish engulfs, not as much as morning stars and evening stars. Bullish or bearish engulf, and really any of the bullish or bearish signals in the middle of a J-hook or an inverted J-hook. Now what I'm going to do right here is I'm going to do minus QM here, and it'll invert the chart. And you see how if this was down, bounce up, and then fall over. This is upside down, but if this was not upside down, this would tell me I'd be looking to go short here. All right. All right. Jen wants to know, can you show when you left, you felt the trend on SPY change from bearish to bullish this year? Sure. Now, you wanted me noted about the SPY. I don't use the SPY because it's not continuous trading. You get a lot of gaps that, honest with you, I don't like. So I use the futures. If you have the capability of monitor them, because you see you don't see the gaps here, and gaps tend to exacerbate things really. And what I do is that I still use the 8 and the 17, and we were in a downtrend until we got down here the end of April 23rd, 24th, and did this bullish move, huge bullish move off the bottom. But then again, we'd had big bullish moves before, so how do we know that that's going to be the bottom? I don't know right here on the 24th that that's going to be the bottom or not. I have to let it do one. I have to let it do one thing, and that one thing is, and this is my secret sauce here, Jen. I have to get higher highs and higher lows. Higher highs, higher low. Higher high, higher low. Guess what that is? That's an uptrend. Maybe I should pick out a different color here. Doesn't work as well. And basically, you pick out the swing levels. Swing level, swing level, swing level. Uh-oh. Now, what happened here? We had a slightly lower high, and this technically dipped to a lower low, but in fact, it really did. It held 2,800 on the closing. So on a closing basis, it maintained a slight upward trajectory, but we were basically forming a wedge. And until we got here and did the breakout, that told me that we were more than likely going to continue to go higher. Even though the stochastics RSI is up here pegged at the top. Wait a minute, Steve, you were telling me that when they're at the top, you start looking for it to go down. When it's down here, you look for it to go up. Yes, but the strongest of the strong stay up here at the top. The weakest of the weak stay out here at the bottom. let's. Okay, okay. Hopefully somebody will be able to help you there with that, Matt. I'll have to move on. When Bob wants to know the question: when trading futures intraday, what time frame do you do? And I find most meaningful. I'll use a 3-minute chart if I'm going to use a time-based chart. But I don't like to use time-based charts. I usually like to use price-based charts. I am going to see. Well, I'm going to have to do this. I don't have it open yet. I'm going to open up my NinjaTrader. I didn't want to. I don't normally like to show NinjaTrader because it might confuse people. We already have enough charting programs. And you're going to see 3 charts are going to pop up here. And they're going to be the micro E-minis. And because we're in after hours type of trading, I'll take the 5 minutes so I can see the big picture of where we are. We're loading up the data right now. And what I like to use is the Unirenko. And look under RENKO, Renko charts. And I just use a variant of that. A standard Renko will not have any wicks. The Unirenko and some variants of it do use wicks. And I like them. And I have them set up. And I basically trade the trend. When we're in a downtrend like this and we get, let's see right here. Whoops. I am going to have to change that color just a little bit. When we did this Oreo cookie is what Doug likes to call it. We basically have a sandwich, a 3-bar candle pattern. When we break below that, that's time to go short. I could have possibly gone short up here, but I was concerned about this level here, and I thought we would bounce. We didn't, or it would have been, and it didn't bounce. It tried to, but it didn't bounce. And these are very, very quick, and I will not use these after hours or pre-market. I will only trade these during regular trading hours. Unless it's 3 o'clock in the morning. And the reason I do 2 o'clock, 3 o'clock, and 4 o'clock are when the futures open in Germany, the regular market opens in Germany along at 3 o'clock, with the 3 o'clock also being futures time for London, and London opens at 4. So 2, 3, and 4 o'clock in the morning, if I've got nothing better to do, I'll get up and I'll trade a little bit. Because if you go back and look, we actually make quite a few moves overnight before we come, and that overnight move, a lot of it occurs there right at 3, 4, 5 o'clock in the morning. 2, 3, and 4, sorry. Okay. I don't think it's trading gaps with Stochastics RSI, but it might be, Ricardo. But anything that mentions Stochastics RSI, because I did a full paid presentation, I didn't post the whole enchilada out there. I don't think that'd be fair to people that paid. Eddie, when you say this presentation, which one are you talking about? Now, this presentation tonight will be posted to YouTube later tonight. Right now it's 9 o'clock. It's going to be at least an hour to hour and 20 minutes after I finish to render it and to upload it to YouTube. Dahl wants to know if I'm using envelopes. Only to mail things. So if you're talking, you're seeing here that these little envelopes here, I've color coded them. That this one goes red, telling me I'm in a downtrend. And this is bluish because green doesn't show up very well in the background. That tells me I'm an uptrend. So what did I say earlier tonight? I'm looking for longs here. I'm looking for shorts here. So I'm looking for my patterns. This tells me long side only, short side only. When I get to the chop right here, put the chalupa down and walk away. And that's what happened here. We're in Chop City. Now, are we starting to trying to establish some sort of trend here? Maybe, but that's where the 5-minute mark points up. And we gapped up to that opening around 27.13 on the Dow. We're going to try to hold that. So we're probably not going to go a lot further down. And what I've got is I've got some squeezes and kind of a stochastic type of oscillators here. I can't go into those tonight, but they help me go long or go short. Tell me where momentum is. But this is basically Carter's R squeeze. Let's see here. Okay, Eddie, got it. Yep. Let's go back out to the presentation. All right. All right. One stock only. If you're looking long, tell me you're looking long. If you're short, tell me you're looking short. If you're already long, so I'm already in it long or I'm already in it short. I would suspect most people are long and not short. Okay. Dahl wants to look at Piffy. Now I'm going to have to... There we go. Pfizer. Let's back out a little bit here. Pfizer gapped down. I have no idea why they gapped down, but there's got to be a reason. Right now, we're kind of in a bear flag because what I'm seeing here, I would not go long, and you said short, but here we go. What would you do with that bear flag? This is a good pickup for a possible short. Where it's got to get below is probably here around, what, 35 and a half, with the first checkpoint at about 35. Now this doesn't move a lot in dollars, so options would probably be the best play here. And where would the next levels be? Well, we've got some here, we got some here, maybe 34, but maybe all the way down here at around 32. So you're going to see me do something. I'm going to go into shorts. I'm going to hit symbol, PFE, and I just added it to my short list. Thank you very much. All right, Bob says Facebook, and I go, well, book your face. I don't know whether you want to go long or short. I just said so, Bob. Right now, we're in kind of limbo land. What we've got going on. Well, sorry, sack-a-doo-doo. All right, let's do this. That right there basically is the trading range that we're in. Down to 220-ish, a little bit higher, to 232 or so. So 222 to 232. What do we have to do for me to be interested in a long? I got to be up here somewhere. What do I want to do for being a short? Probably down here. But remember what I said. It may take a while for this going down before we get a flip of the volatility dot. It may only take a day or two. And we may have to let it go down, bounce back up like Pfizer did, and get a downward trend. JG wants to look at Apache long. We did the gap up. We're probably going to gap up again. We have a resistance level around 20, but the biggest one is up here around 22 to 22 and a half. The problem I have with Apache, if you're not in it right now, is where does it stop? If I go to a 60-minute chart, I could probably use 14 and a half, but we could pull down to 14 and a half and be a stop and still be very, very bullish. What I normally do, if you see these, you see that big gap up there? I fill that candle like that and said, we closed right here. We opened there and closed at the end of the day in that next 60-minute candle. I fill it in. So what is this? It's a big long candle, and I'm looking for potential 45-degree runner, and that's what we're getting. What are we going to probably be looking for now? Pull back, curl back up. Maybe something down to 15. But your biggest problem is going to be, it's going to gap up in the morning, and we got to figure out, you're going to have to let it pull back, either intraday or on a daily basis. No two ways about it. Howard wants to look at GNRC. Generac. Well, it is curling up from the bottom. I could see us possibly retesting 122 or so. If you're buying the stock or whatever, where's the stop's 110 or so. But if you could get in where we are, you could have about a almost $7 upside, but you got about a $6 downside, unless you can find a different way. Maybe a 2-hour chart, a 4-hour chart. Yeah, still 110. 60-minute chart. I wouldn't want to hang my hat on 113, but you could. We're going to roll over here on the hourly unless we flip it in the morning. So maybe along over about 116 with a stop about 113 or so could work, but it would be an intraday trade. And if you get in on a 60-minute chart, don't be trying to change the time frame to a daily or to a lower time frame like a 15 or a 5. That's a no-no. You get in on a stock and get in that pattern, stay with that time frame. UNFI, I think we covered that. No. Did we? I guess not. UNFI is on the list of stocks for earnings. 6:10. 8:10, morning or afternoon? Morning on Wednesday. So if you got in tomorrow, I would say you have to exit by Tuesday night, because I don't want to hold over earnings. I'm not a gambler. I don't have any edge here. So Bob, I wouldn't be doing that. I would wait. Earnings is either going to break you out above 24 or down below 17. And it does have 7.5% average to range. It's pretty wild. And I would also bet, based upon this and the fact that we got a number of wicks there, this is probably going to be a little on the spready side, meaning the bid and ask are going to be spread apart a little bit. So make sure it's not too bad. MY wants to look at Beyond. Why people would eat vegetable stuff, it's beyond me. Okay, that's just my take on things. That's a trading range. We got to get above it or get below it for me to be interested. And because this has 26% of the float is short, I'm probably looking for the breakout long. And then I go back and look over here. 160 to 168 would be targets. That's not a bad one if we get a breakout. Ricardo wants to look at AMD short. Blasphemer. What do you think I'm going to say about this one there, Ricardo? We're in no man's land. We have no trend. Look at the, I'm going to show you my EMA only chart. This is just the 8 and the 17. Does it have any candles to confuse you at all? We're in a downtrend here. We're in an uptrend there. We're in, I don't know, here. Make sense? Trading can be, and chart reading can be very, very simple. Our Funk says he's long Coke. Watch out, we're getting up to this 49.75 level. You notice I'd marked it before. I'm going to get rid of this one. And that's the gap. You're going to probably hit this level, whether it pauses or pulls back, I don't know, but it'll probably do one of those. And then if it goes higher, it'll probably go to 51.50, and then we'll see what happens there. This is a slow mover. It only moves 2% a day, $1 a day. Trades a heck of a lot of shares. Gwen wants to know how I'd mark up EW long. I wouldn't mark it up long. I'd kind of mark it up like that. I could go as low as these over here. Unless it gets below about 68, you're not short until it gets up above, what is this over here? 77 or so. It doesn't give you any direction. I told Ricardo, it's going to be a broken record here. This one's down. That one was up. This is, I don't know. And the biggest problem is that there's probably some resistance over here in February. Yep, right in here. But trading from 76 to 80 wouldn't be bad. I'd take the money. Sorry, I'd like to say one thing. I'll interrupt this just 1 second. We've already come so far off the bottom that we probably need a pause or a pullback. Now, I'm not going to be trying to anticipate the pullbacks. I'm just going to read the charts and trade what I see. But I don't see. You saw that I only had 11 longs, and I had 5 shorts to start with. Now we have 6. But I normally have, and most of those were kind of stretching it a little bit just to get us something to talk about. To be honest with you, we're in no man's land right now, for me. Mostly in no man's land. Okay, let's look at Medtronic for Sandra. Now, what am I going to pick out? I'm going to pick out the tops here. You could go long, and just because we're coming up on that resistance level, swing level, it doesn't stop me from going long. What would stop me from going long is how far back is the stop? Stop's down here. Or maybe up here. But you're probably giving it $5. And I guess you could say it can get to 113, 10, 2 to 1. But you've got to make it get through this level. What I normally see happen is it'll get up to here and it'll wobble, and then it'll break out or it'll break down. You'll get, just be patient, and Medtronic will tell you. You got plenty of time before the next earnings date. Especially with the market already this overbought. David Irons wants to look at XLG Longola. Well, the Russell Top 50 has been, and you know what? Being the top 50, I kind of like that one. I've not been exposed to that ETF before, but I like it. Now, again, I'm going to reiterate, where's your stop? You're going to need a pause or pullback. It's going to need to either go sideways or pull back. Right here, or pause right in here. So Rick would draw the buy box somewhere in there. I could draw a buy box as a breakout above that as well, but it'd be a breakout. Rick likes the pullbacks because it gets his stops tighter, and I totally agree with that. That's preferred. Oh, Jen wants, and Dahl wants to sneak. Oh, sorry, not Dahl. Jen wants to sneak in a couple, I think, or was that just a question? Looking to buy where? Well, that's a good question. Color. How about if I line that up? Or how about if I do this? Since I'm not very good at my straight lines. We've got a wedgie going on here. As we get inside this funnel, get towards the apex of the wedge, it will break out one way or the other. I just don't know which way it's going to go for sure. However, I have an inclination, and I have an inclination because down here, my stochastics RSIs come in from overbought, and if we break up above that trend line or above this price level, it would say we're going to break out to the upside. So I'll be watching for that. I'd be surprised if the first move wasn't a breakout, but we could get a false one. But you know, we always got to be worried about that. Well, be looking for that. Mikey wants to look at Bristol Myers long. Ooh. Well, what's that going to tell me when I go over to EMAs? Yeah. Down, up, and what this is a tale of the markets. The markets were going down here, and Bristol Myers is going with it. I bet you the beta is pretty close to 1. It's matching pretty much the S&P, maybe a little bit less. This was the recovery, and now we're in kind of a, I don't know yet. Okay. I love this, the EMAs. It tells us when we're definitely in downtrend, definitely an uptrend, and in a I don't really know. Pretty simple. How would you set parameters for possible trades after earnings from Babaruto? You're welcome, Dahl. Okay. It reports after the bell tomorrow. Is that correct? I would say come back and ask me at 4:05 tomorrow, 4:30, and they'll tell us. So, depending upon what happens, now, all right, that's what I thought. Anything above that level right here, which is about what 225 or so, 230, that's all-time highs. There's nothing above. It's clear sky. What happens if we go the other way? Been on a pretty good solid run. But we get below 200, the next levels that it wants to get down to could be, the ultimate goal for it to be would be down to the 170s. But you have the 100, you have the 50. Between that, it's probably not going to go in a straight line. But if the earnings are really bad, it could straight line to the 50 in a heartbeat one day. So that would be my parameters there, Bob. Do you see bullish kicker patterns in OW? Or is that OW or OVV? I'm going to say it's OVV. Yes. Oil and gas. Canadian, right? .to. Or it's they've got ADRs in the U.S. Sorry. That'll be my first target. I'm gonna be a broken record. I like it on Friday at $9.50 or so, maybe $9.65. I don't like it on Monday at $10.50 because I don't know where the stop is. Maybe it'll pull back for you and do a curly Q here and give you an opportunity. Right now, the tightest stop I could get would be 9.5. But if you look at it on a daily basis, $8, $8.5. Now, the volatility stop dot is right here, 9.50, which kind of matches what we had here, although I've got 9.25, 9.5. Yeah. Bob Doyle, you're welcome. All right. No more symbols, please. Walmart short. Another blasphemer. Gotta take a swig of tea. Lose my voice. I've already got it marked 120. This is actually, those were options that I had. So let's look. It broke under this support level on Friday but recovered. If it rolls back over, you got a continuation. And where the continuation is, yeah, that's a toughie. Let me get over here. Not a whole lot till you get down to about 116, 116-ish. Okay. Somewhere around the 200 period moving average. That said it's 118.77, so I'm taking around 115, 116. All right, I covered both sides, Bob. Facebook. CRWD, crowdsource. Whoops. Would help. Well, my stochastics RSI says we may need to pull back some more or go sideways. $96.5 to 97 on the long side. You're welcome, MT. It's not that far away from the T line, not that extended. But if we go to an hourly chart, we do the EMAs on an hourly. They tell you something here. I tell you, I like this EMA only chart it tells you that we're kind of a little toppy, may need to pull back or go sideways. Okay, thanks, Richard. Appreciate that. Saved me a lot of work. Bob S. wants to look at NVIDIA Long. The green team. We're kind of in a box. 820, so they've just reported. I think they reported on this down day here. With the big volume, yeah. We're going to have to get back up here to 368 or under 338 to 340 and then get a good risk reward ratio. But right now we're in no man's land again. I hate to say that, guys, but that's where we are. Yeah, let's look at this T20. I'm sorry, I normally look at that, and I did not start with it. This is my pullback zone. Let me do the line-only chart. Yeah, we're at 99 percentile. 99% of all stocks. Yeah, thanks, Richard. Appreciate it. Well done. Now, I've watched this for 15 years now, and this pullback and bounce zones work really well. It doesn't tell me how big the bounce will be or the pullback will be or how long it's going to last. Excuse me. This blue line is the S&P 500, the SPX, SP Cash. This is the percent of stocks making the 4-week new high number divided by the 4-week new low. So there are 99 stocks are making new monthly highs for every one that's making a new low for a month. Yeah. All right, ladies and germs, let's call it a night. I appreciate you guys showing up. If you guys have any questions or comments, you can always, 1 second, I'll be right there. Okay, you can reach me at topguntrading2@gmail.com. I ask you to do one thing. Put in the subject line coaching. And even if it's not coaching, just put coaching in there. It'll pop up in my Outlook box and tell me, hey, Steve, go look, you got a new email. So feel free to do that. Now I got one other question down here. Trader X. How to get volume over price indicator on TOS. Okay. Anybody else wants to leave, feel free. We've basically done everything except this. Okay. You go up here on studies. Left click studies, edit studies. And going over here under volume profile. Or if you just type the word profile, I think it gets it faster. Now I've already got it there. So I'm going to use the sprocket. When you pop up, leave automatic in one, chart, yada yada. Change on expansion to no. Because when you put yes, what I'm going to do, I'm going to hit OK and apply. And see how they came over here? Well, somebody got the idea that it would tell you that, oh, the price is around 114, the price around 124. But I like to overlap them because it sticks out at me. Just maybe my brain's different than everybody else. I don't know. I know it is. Okay, let me do edit studies. Let me go back and change it to what I want, and not expansion to no. All right. Profiles I don't really care about. Point of control, I think yes, and then value area, no. It must be the point of control. I'm trying to get rid of that red line. Studies. Edit studies. Yes. Oh, no, it's still there. That red line's still there. Maybe I have no idea what it is. That might be the value area or something. Okay? Anyway, I ignore it. I probably ought to try to find out what it is. All right. Does that answer your question there, Mr. Trader X? Yep. Okay. We'll call it a night. I'm going to shut the recorder off, and I'll give you about 20 to 30 minutes, and we'll have that LTA scanner video up. And again, obviously, if you have questions, you can, during regular trading hours, go on over to the support room, and Ed is there to answer any and all questions. Aloha.